what's really going on with China and America, baby dolls. I'm going to give you a very yummy explanation as to what's going on. Let's start with the stock market. So right now, friends, what I'm going to do is just separate the facts from everyone else yelling that it's over, Great Depression, Trump's going to send everything to zero. You have Stephen King, the author from all the famous movies and stuff. He's saying, Trump is just killing the economy. It's all going to zero. You're hearing all that, and I get it, man. Let's just go through some stuff. Okay, so this is the Chinese stock market. Okay, Chinese stock market, friends, has gone nowhere in 10 years. Okay, zero gains in 10 years. The S&P 500 is up 120%. Okay, so S&P 500 has actually been going up for that period of time. I'll actually show it to you right now, since 2015. And I'm just going to show, see this S&P 500, US Chinese stock market is down here. All right. Now, another thing interesting, right? Showing you some stuff, right? Even in 2023, look at Elon Musk. A lot of current year similarities to 1929. So this Elon Musk, bro, Elon Musk in 2023 was saying lots of similarities to 1929, right? So I'm just showing you, we're all human, man. Sometimes this fear and this doubt creeps into us, but it's not about whether that doubt creeps into you. Okay, it's not about that. It's about how you act on it. All right, that's pretty much what it comes down to. It's kind of like, friends, if you're a parent, if you're blessed in this world to be a parent, you do feel frustrated with your kids. Maybe they, didn't do their bed properly, socks are still on the floor, not listening, too loud, whatever. But how you react, that is what it comes down to. Everyone feels frustrated, right? But how did you react? Are you making your kids sleep outside in the rain for a week because they dropped a glass in the kitchen? No. Most people aren't, okay? That's not what you're doing, yeah? It's how you react to that. That's what it comes down to, especially in markets, same thing. So the Chinese stock market, gone nowhere for 10 years. China's more focused on its real estate Ponzi, but that's been slowing down for years too. So we know, right? Okay, so in China, they love property over there. They love property. Property is very expensive, especially in Shanghai. It's got the highest multiple in the world because capital is not allowed to flow outside of the Chinese economy, right? They've got a fixed currency, so they have to make sure that they control all the capital outflow. So people have to go through roundabout ways, pay big taxes, then they get the bitty coin, right? If they want to do that. But most of the time, it's got to stay in control. They have a lot of capital controls because they've got to fix that currency, yeah? But their Ponzi of real estate in China, just like everything else, yeah? I mean, it's so propped up and it's so bubbled. They have to keep it going. They can't let it explode. But it's been slowing down the past few years. And China's own rates have been going down. So they need to print money. They pretty much need to print money. But there's a problem, though, which I'll show you soon, okay? So China, friends, they need to print money to do stuff. The thing is, though, your currency is teetering on the edge of it's weakening harder, right? So that's why what China would really like is if the US dollar weakens so they can bid up the Chinese yuan and then they can print and offset it. And they get that free printing boost. That's what they would like, okay? Something also to consider while I play some Pumpy G music, friends. Since the crowd of soy boys is backing China in the fight, I can only imagine that somewhere down the line, we see a long stream of capitulations by many countries. They will renegotiate with US of A, and China will be left to capitulate into making a deal. So if you've been reading, fans, you got Uncle Ray Dalio saying the tariffs are not good. The tariffs are no way. The trade war. I get it, man. I get it. But I'm looking at it from a perspective of reality. So, friends, I did economics at uni too. A lot of it, man, you think you know everything. These economists, they don't always know stuff, bro. They don't. A lot of the world's full of greys. A lot of it's fugazi. Like, for example, you're in crypto, you know they're printing money, bro. You know what I mean? Like right now, friends, if you went and asked someone out here in normie land, hey, you feeling good or bad about stuff? They're like, probably bad. Costs are high and stuff. And I'm like, well, you know what? You know they've actually been printing money in the background? You know they've been printing money in the background? They're like, nah. What do you mean? Because in their mind, they're like, no, the printing of the money is when you give me a check, just like the zombie virus, and that's what they think in their mind. But no, like they're always printing the money. They always are. Yeah, you weren't taught that at school. You weren't taught that anywhere. They're like, no. They said they don't call it that. They use no. You're accommodating for the higher population amount and the new currency units and the business activity. That's how they say it. They use these other terms. No. You gotta adjust the money supply. Blah, 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 blah. Just shut up, bro. You're printing money. You get to push a button. You print money. It goes to your banks, the other insiders, called the Keynesian effect. They get the spreads. They get a lot of money out here. It seeps into the economy. The retailers get it last, and Bob's your uncle. Okay, that's pretty much what's been happening or will continue to happen. So that system, friends, we're just giving you an example of something there. Like, yeah, in the textbooks, it's not meant to happen, but you know, in the real world, it does. Yeah. Well, I'm telling you, I think something with these tariff stuff is going to I think it's going to surprise us. Yeah. I think we're going to surprise. Like, wow, I didn't expect you guys to capitulate that fast. Or I didn't expect you guys to go and do these big changes and move these things in here, right? You know, I mean, even a lot of people in America, not even a lot, but just a lot of people have been seeing the soy cabal again. They're saying, Americans, you don't want the manufacturing jobs. You don't want this and you don't want that. You don't want them. That's why they went overseas. We'll see. I think a lot of this is America seeing China rise up and they're like, hey, we made you and you're trying to reward us. Nah, that's what I see it like this. That's how I see it. And by the way, it does help, friends. Like, the only reason we're talking about it is because everyone's selling. Let's be honest. Yeah. The only reason this is even a topic of conversation is because market's down in bear market territory for the stock market. And that's the only reason why this is a convo. Yeah, so is it opportunity, you know? If you had sideline cash out here, you could DCA buy stonks. We're not in stonks, okay? We love cryptocurrency out here, but you know, the cryptocurrency industry, friends, we're sniffing out, bro. Come on, bro. We know where it's all leading. Let me continue now. So this is the thing. So you see these China friends. Remember, this is CNY first, and this is USD. Okay. Normally, when you see it, you see the number like 7.2, which means they put the US dollar first versus the CNY. So I don't like doing that. I like leaving Big Daddy on the denominator, and I like leaving Little Daddy up top. So it's easy to see, which means up means strong and down means weak. That's what I like. I like putting charts to do that. It's nice to do that. See, that's why with this thing going down means a weaker currency, yeah? Whereas if you do the other one, it's inverted. It's the US strong over you, which I don't like doing that. But, you know, it is what it is. So that's why you're listening to me for the highest value content in crypto. Now, China have to keep devaluing their currency to avoid tariffs, but they are literally cratering their purchasing power down to zero just to avoid being economically wrecked. So if you're curious, like, what's actually going on here? Well, remember, Trump says tariff. So what China does is they manipulate their currency. So firstly, they go, because this is what happens, this is how the fiat system works here. You know how it's all free-floating currency? Fugazi, okay? They all meet up. You know when they go do that gay 20 meeting thing? They go there, some big orgy with all the old dudes and the lizard people. They go there. What they're actually doing is they talk to each other and they go, okay, how much of your supply are you printing? 3.5? Okay, we'll commit to 3.5 in the next year as well. That's what they do, yeah? So the currency fluctuations of the supply and demand is not as aggressive, yeah? So that they communicate to each other. That's the Keynesian system, friends. That's Keynesian fiat currency. So everyone has to agree not to cheat. That's what it is, yeah? Now, if you tell everyone that you're only printing, like, let's say everyone prints whatever, 5%, but then you print 10, yeah? It's weird to us because, like, oh, you're just depreciating your currency but down faster. But actually what's happening is you're basically sending an alert to the whole world. Come for tourism. Come buy all our stuff. Screw everybody else. Look at how expensive their currencies are. Yeah, so then what happens is you start stealing economic activity from other countries because you lied about how fast you're going to devalue, right? So, like imagine you just be a little country. Let's say you're another country, friends. Just like, let's say Canada, for example. Let's say you and I, we got an island in Greece. We actually have maple syrup factories there too, right? And then we went to the Keynesian, that gay 20 meetup, the orgy, and they basically all said, well, yeah, let's print 3% of our currency this year, and it's all going to be sweet. But then you and I lie. Let's say we went and lied. We go, you know what, bro? Let's make it really cheap for them. Let's say maple syrup is $5, but then we end up basically making our currency so weak, so everyone out there in the world, they can buy like 30% more maple syrup. They're coming straight for us. So they just literally just come straight here. All our economic activity gets boosted. Now, you do end up paying a price for it later, but you get their first interest. You're stealing mindshare network effect out here. But what ends up happening is the next time we run into Canada, they'll want to knock us out. We'll probably have like a cat fight in one of the halls of those meetings out here. So that's actually how the fiat system works. So you basically, all a bunch of old dudes, wrinkly old dudes, have to just agree, okay, don't depreciate too fast or whatever, you know? So they kind of stay in line. Which, it's funny how it works, right? It's not actually like a real free thing out here, but it kind of is free with how they work it out. So that's the thing with China. Okay, remember, friends, when we're looking at this, see this is the Chinese index, their fixed currency. With China, when Trump says, hey, we're going to like tax you 20% more, what they go and do is they go and they start manipulating their currency. Yeah, they literally go straight to their currency and they go, okay, we're going to make our currency 20% cheaper. You know, not the exact amount, but they're going to account for that. So basically, like, you know, if you could only, let's say with your currency, you have an American dollar, your $100 now buys like 100 units of whatever it is. Well, when they depreciate it, they'll depreciate it a bit. Now you can buy 102 units. So they're paying like example, 2% tax, but you can get more units now. That's what they keep doing. So that's why Trump says, man, you guys keep manipulating your currency. You're not actually playing fair, right? You're meant to be, like, if you're coming to the table, you can't do that. This is meant to be the price we all have to agree on, okay? That's where it comes into some problems later on. Now, here's the most important part I've got to stress to you, okay? So not only do you have that, friends, China does not have a liquid bond market. They don't have a proper yield curve. They do not have 100 countries who own their long-term bonds committed to holding their currency. They don't have that. They don't have the network effect. 85% of the world trading volume is the US dollar. It's around 83 to 85%. So where's the yuan, bro? Where's the yuan? By the way, China don't even want it to be the number one currency because you become expensive. Okay? So that the advantage in America is they can print. The disadvantage is you can't make it that cheap because everybody's a forced holder of your currency. They literally get to come to the table, they have to hold the currency. The USA has all of these, friends. It's got a deep liquid bond market. It's got the yield curve. Like, I even do this example. Like, would you loan your money to the Chinese government for 10 years? Would you? Expecting to get all of it back? No, you wouldn't. Okay. Now imagine you got $1 billion. You going to do that? If you got $1 billion, are you going to buy a single Chinese government bond? Hell no. Hell no. America's got 30-year bonds. That's how much deep trust they have in it. They're 30-year bonds, right? So I look back at this chart. So after seeing all that, because what I'm doing is like, a lot of you really want to see this. I've been getting a lot of requests of this. And I don't know why, but it might be just because I'm giving you a fresh perspective. I mean, like, I love America. America's the best. And look, I'm a day trader. Okay, I day trade my whole life. Asia session sucks balls. Hairy, smelly, wrinkly balls. Europe, you guys are all right. All right. Sometimes you're all right. Sometimes you just can lead the race. Sometimes. But just, you're nothing in America, dude. No one's America. Just move over, bro. Move over, friends. It's like, look, if you trade, you'll see exactly what I mean. 2-tick range up and down. No one cares, bro. No one cares. Wait for the US cash session. That's the big daddy move, okay? So that's why I'm looking at this. I'm like, well, are you all saying it's over for America? Really? I don't think so, bro. It makes it easier for me because they're saying, oh, it's over for America. Yeah, but if it's over for America, well, you're saying China wins? You're saying China wins. Where's your bond market, bro? Where's your deep liquid inverted yield curve stuff? You don't even have that for Ghazi, okay? You just have government manipulated shit. You don't have that. Where's your capital inflows into the country? They trap you in there. They control you. It's none there. Yeah? Now, whenever I talk like this, there's always one dude comes out. No, you don't know the factories. You haven't updated your worldview. Blah, 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 blah. Bro, where's your bond market, dude? Where's your bond market? Yeah? Where's the $1 billion investments buying 10-year government bonds from China? Newsflash, there ain't none. Where's your yield curve? There's none. It's poop. We're all poop. So, I'm just looking at it. I'm like, well, it's weird, bro. The Americans are saying it's over for America. What? Look at yourselves. The US market is king. Most likely it's buy the dip. Jeets got faked out in the bonds yesterday, and now the rate cut odds are back above 51%. So this is also interesting. I'll just show you what's happening. I'll show you the T notes, friends. This is the ZN. Now, I know the pricing is really weird, but like in this, friends, when these go up, it's risk off. Okay, so as stocks go down, this goes up. Why? Because as this price goes up, your interest rate yield gets lower and lower. There's more demand for the bond. So it's like, oh, you're buying something for $100. If you're only paying $90 for it, oh, cool, there's a 10% yield on that. But if you're willing to buy it for $99, you're like, whoa, you're only getting a 1% yield because you're that desperate because everything else is losing. You'd rather take that $99 price to get $100 back. You'd rather do that, right? So what actually happened was everyone's like saying, oh, no, there's this worry. Why is there worry? Because with the China stuff, people were expecting the bonds to rally hard, but they've actually come back down. So that's why people are scared. They think maybe China's or someone's dumping. So that's why they think that there's some issues going on. Because if it was truly US Fed's going to save us, the bonds should be having a bid. But actually, since they've come back down, it's like the bond market is still saying, oh, we're going to have this issue with high inflation, which means the rates are going to still be high. That's what they're pretty much saying right now. But maybe we're just watching it in slow time. We've got to come out here. During these times, man, there's always chaos, but you don't get like never, ever, ever, ever. Go look at any chart, dude. You don't get, oh, cool, I'm going to go buy. It goes up only. You don't do that, bro. You know when you get that part? You change it to the weekly, okay, and then you draw a line for 8 weeks. There you go. 2 months from now. It's never on that day or week. Never, never, never. Friends, I remember I told you yesterday, I go, let me guess. They're going to make a deal. Then they're going to tweet and they're just going to go back down on it and people are going to cheat again. That's exactly what happened in the stock market and bonds. Literally to the tick. So it was recovering. Someone tweets, oh no, it actually is good. It's just people looking for a reason to sell. The ultimate goal is to get interest rates down to restructure cheaper debt. No matter how you spin it, the end result will be more money printing. These tariffs just accelerated the process. Crypto is ready to go up when the market realizes that money must be printed again. So this is that chart, you know, the global M2 thing. Just showing you, friends, like they've already printed money, man. They've already printed money. You know the tariffs, just to let you know, they've just accelerated the money printing process because they just got GDP. Instead of like grinding down lower, GDP just like dropped 3.9%. That's the estimate now. Oh, okay, cool. So you just print money faster. Yeah. But like, that's how we get the bull market, man. Because they always overcompensate. That's the thing, friends. So this is just our story that we're waiting to see, right? So it is interesting how it's all playing out. Yeah, I have full faith. America's going to prevail. Friends, like, it's kind of funny. Like, Grandma Peggy, who knows, doesn't even know what a ZN futures T-note is. Ask her. Hey, Grandma Peggy, you got 2 choices to put your money in. You got $1 million. A Chinese bank account or an American one. There you go. Literally, there you go. It's just, I know it sounds so retarded, so simple as that. Think about that. If Grandma Peggy's a proxy for trade deals and governments and everything out here, America's king, man. So everyone's trying to make it a real Trump issue, but also, friends, we're in markets and Fugazis. We just found out there's some Mercury retrograde or something going on. It's just funny. It's wild. Now, as a reminder as well, when would the Fed act? Well, the bond move index, friends, it's at 139. So Arthur Gaze actually said, we're actually at the critical levels now. Interesting. You want to know, the US Fed had to act up here. You see this? This was the USD depegging. The US Fed acted up here because the bonds were going too volatile. They're going nuts. The bond volatility. Check it out. I mean, we're right up here now. We're like right here. So I wonder if those bonds like start shaking up and they start going the other way, that there's some hidden announcement when they go, oh, we're going to do some sort of operation to insert confidence in this thing. That'd be funny out here. Let me know what you think about that, friends. I hope it was refreshing just seeing everyone saying it's over, it's over, it's over. I'll be honest, man. I know Uncle Bobby sold the third. I know there's risks. Just this is not the one that scares me, man. There's no euphoria, bro. This isn't the one that scares me. The one, like, I didn't see enough weak hands in. The business ISM's down to 49. When that business ISM crosses 52, okay, game on. Until that point, I think we're still on. Like, subscribe, catch you soon.